This morning you can see all the ball ground because of the backlight. Everybody because even Christian because I had a soft spot on the top. Johan and
Good afternoon, almost good afternoon, everyone. I'm not sure, we're just trying to see who's going to be admitted into our Zoom chat today. I see there are a few people coming in. Okay. Just checking on some Zoom etiquette at the moment, and with regards to the Connect with the Chamber series, you are online at the moment with myself, Sam, and I've got Les Holbrook with us. So just so that you know who's letting everyone in. I see Rino. Rino, you're on board as well. Hello, Rino.
Hi there.
Hi, good. Great to have you on board.
Yeah, pleasure.
Well, I'm just trying to get everyone into the room. Guys, just so you know, the etiquette rules for Zoom, we will obviously be muted, and then, you know, to sort out questions, we can certainly raise your hand. Are we monitoring it and moderating who raises hand so we can maybe interact, as well as there's a chat option. So if you've got any questions for Rino, just place it into the chat box, and then after Rino's presentation, we will be looking at the questions raised for some answer. Kindly note that obviously whatever gets discussed on our series is information sharing. It's a free benefit to everybody out there in the community, just so that everybody is in the loop of what's going on. By no means possible are you to like express it in a negative aspect, but do obviously be in touch with your own professional candidates, your own professional parties out there to validate any other further information. And if you need assistance with anything, Charteris and Barnes team are definitely here to assist in taking matters offline to discuss. Okay. We still have a minute to go before we kick off. Just want to see if there's anyone else coming into the room. We had a great response today for our series, so thank you guys for logging in. Really good to see the enthusiastic people out there that are keen to join in. We have 7 delegates in our room so far. Welcome to the Chamber's Connect with Chamber. Just remember to keep it on mute so that we are listening to Rino and his presentation and what he would like to express today. I will be admitting people into the room chat as we go. I'll be starting in about 30 seconds, where we will kick off. Rino, are you ready?
Yes, ready when you are.
All right. All right, welcome to the Connect to the Chamber series. We're on session 2. I would like to welcome everybody on board so far. We will be admitting as we go through this chat. I'm sure everybody is still trying to connect on. But yes, I'd like to do an introduction to Rino Nepgen from Charteris and Barnes. Rino is a partner there and houses the King Williamstown office. He has a qualification of a Bachelor of Commerce Honours through Nelson Mandela through the Metropolitan University in Port Elizabeth. Postgraduate Diploma in Law, Tax, as well through the Nelson Mandela Metropolitan University, and as well as a Chartered Accountant. Rino's main focus is the private sector consulting, the tax-related matters. And through this, his capacity represents the firm, as well as the SAICA board, the border region, on various tax-related committees. Rino is the current president of the East London Rotary Club and is a very keen runner in his spare time. I'd like to introduce our guest speaker today. Rino, welcome to session 2.
Thank you, Sam, and yeah, welcome to everyone. Nice to have everyone join us. Yeah, what I will do is I will share my presentation shortly, which is really just running through cost mitigation at the moment, and you know, what we can do and ways that we can explore dealing with the cash flow challenges that come out of the current situation. So what I'll do, let me just share this presentation here quickly with you. Sam, if you can just make me a joint host, then I should be able to share.
Okay, hold on 2 seconds. Sorting that out, hold on 2 seconds for me.
If you can't, that's fine. I mean, I can just chat and just run through the slides on my side.
No stress. I will try and get you in there now. Hold on 2 seconds. Here we go. Okay, no, it doesn't seem to be working very well on my side. I'm not sure why.
No problem. Okay, so unfortunately, you're going to be looking at my ugly face as opposed to looking at my slides, but that's fine. We'll share the slides for those who want to have access to the slides. The slides themselves are fairly basic in the sense that there's not a lot of detailed information. So most of what we're going to be covering is what I'm saying as opposed to what's contained in the slides. Just try again. Okay, I think we've got it now. Here we go. Share. Go.
Thank you.
Go. Slideshow. Beginning. Okay, there we go. Okay, so I think you should all be able to see my slides now. Sam, can you see my slides?
Yes, I can. Managing costs at the time of COVID.
Okay, great. Okay, so yeah, today's topic, just managing costs in the time of COVID-19, obviously in connection or in conjunction with the Border-Kei Chamber of Business. If we go into the principles, so these really are the underlying cost principles before we actually get into a sort of detailed analysis. So what I've done is I've taken a business, it's a transport business, and we will go and look at their actual costs and then work out what our cash flow needs are and where we have options to potentially reduce costs and really how to manage a business from an accounting perspective. I think a lot of the smaller businesses that are struggling are entrepreneurial, and so cash flow management and administration sometimes is put on the back burner in favor of operational requirements, which is obviously understandable, but I think we do need to look at those administrative things. Now, the 4 principles that I want to just cover first that I've highlighted here, I think are important to understand when we're looking at costs. You know, unfortunately, when people make decisions on a cost basis, they don't always understand these principles. And so I just want to cover these before we actually go and analyze this. Okay, so fixed versus variable costs. So cost is really, it's a cost of your business that doesn't change depending on how much you sell or make. So for example, if you rent a warehouse and in that warehouse you have goods that you sell, if you think about it, your fixed monthly rent is your fixed monthly rent. If you sell 20, let's say you're selling fridges, if you sell 20 fridges, your rent is X. If you sell 50 fridges, your rent stays X. It doesn't matter how many things you sell or what you actually physically do in the space, your rent stays the same. So that's a fixed cost. Variable costs are costs that are directly linked to what you are doing. So in the fridge example, if you sell 10 fridges, you need to buy another 10 fridges to replace 10 fridges. If you sell 50 fridges, you have to buy 50 fridges to replace 50 fridges. So obviously your costs change as the volume of production changes. So the more you make or sell, the more you then have to spend to replace. So that's a variable cost. And it's important to understand those two things, because obviously one of the implications at the moment in lockdown is that some businesses simply cannot trade at all. So the variable costs in that situation would then disappear because you have no income. It means you have no variable costs normally, but your fixed costs would remain. And those are the costs that we need to really analyze and try and deal with at the moment. Cash costs versus income statement costs. So again, if you look at your income statement for the year, if you should have a set of books drawn up every year. And if you look at your income statement for the year, some of those costs are accountants' charges. So it's charges that are put in there to reflect your profit for the year, but they aren't physical cash that you need to spend. And we'll go into a couple of those examples. But what is important is that not every expense in your income statement is an actual cash cost. And so again, it's important to understand that distinction, because at the moment, obviously, the challenge is cash flow. And so we need to understand what the cash flow costs are that we're looking at, not just the income statement costs. There's then a principle, another principle, which is called sunk costs. So sunk costs are costs that have been incurred in the past, and going forward, there's nothing we can do to change those costs. So take as an example, let's say you've invested in a new inventory system and you've paid the supplier. It's a sunk cost. You've spent the money, it's gone, it's never coming back. Okay. So to make a decision going forward on the basis of sunk costs doesn't make sense. Because if you think about it, if you've spent a large amount of money on, for example, an inventory system, but going forward, your business has changed to a delivery basis and you can no longer use that system, then making the argument that, okay, but we've spent all of this money on the system, we need to now keep on using the system is illogical. The fact that you spent the money in the past can't change your decision in the future. Going forward, you can only make your decisions based on your costs going forward. So sunk costs are costs that you spent, but going forward, they are not relevant for decision making. And that's quite a hard one to swallow. I know a lot of people who make decisions and they say, but we spent so much money getting our systems adapted and we've really put a lot of money into training, and so we just have to make this work. That unfortunately is not the way to think about it. The way to think about it is to say, okay, right, this is what we've got. Going forward, what is the best use of our resources? And unfortunately, it might mean walking away from things that we spent a lot of money on in the past. It's just the reality of the situation. And then break even. I think a lot of people would understand that, but break even is essentially the point at which the business is making neither a profit nor a loss. And so normally you would have your fixed cost, which we've explained, and you then would be able to work out how many or what your sales target needs to be in a given month in order to make gross profit equal to your fixed costs so that you break even, so that you run at neither a profit nor a loss. So that is your break even, and that's an important thing to understand because again, if you don't know what your break-even target is, you really don't have much of a goal that you can set for your business, and you don't know how bad your situation necessarily is. Okay. So those are the principles. So what I've done is, just go back here. Okay, so I've put this schedule together of different columns And really it's the analysis of a transport business, which is basically we've taken the 2020 figures from the income statement, and then we've analyzed this into cash and discretionary, into fixed costs, and into variable costs. And it's important to do this exercise because, again, unless we can measure what our costs are, we aren't really going to be in a position to know what our budget needs to be, to know how much funding we need to raise, and to get some idea of whether it's actually practical to continue in a reduced capacity or not. So in this example, we've got in 2020, just the fees there, we've got accounting fees, advertising, assessment rates and municipal charges. So those are like your utility costs, bad debts, bank charges, cleaning, commissions, computer expenses, consulting, depreciation, discount, donations, electricity, insurance, interest, legal expenses, loss on sale of fixed assets. So loss on sale of fixed assets is where you've sold some equipment or a vehicle, and the amount that you've received is less than the book value, the amount that was recorded in your financial statements. Motor vehicle expenses, they're a transport business, so you'd expect those to be quite high. Printing and stationery, protective clothing, rent, repairs, salaries for their staff, security, staff welfare, so that's normally the teas and the cleaning for the canteen and that sort of thing. Telephone and fax, training, transport, travel, and then workman's comp. So that's a pretty ordinary transport business. Granted, it's a fairly large transport business, but those are fairly standard costs for a lot of small businesses. And so the first is to say, right, that's our 2020 costs, and into 2021, we now need to almost create a budget going forward. But to do so, we need to analyze our costs into these various categories. So the first category is to say, right, well, of all of those costs, which of those costs are cash costs and which of those costs are discretionary costs? Because any cash costs need to be accounted for, non-cash don't need to be. And then any discretionary, obviously we at the moment would try and reduce our cash flow. So any discretionary costs we can leave out. Those are costs that we can choose to make or not. So discretionary just means that we have some decision making regarding those costs. And so if we look at it, accounting fees are cash costs, and they aren't really discretionary. Unfortunately, you are going to need some sort of accountant to help you with your tax submissions and your financial statements. So those stay in. Advertising, I know a lot of businesses would maybe disagree, but advertising at this time is a little bit of a luxury. There are ways to get around it, and so you don't necessarily have to spend the money on advertising, so that comes out. Assessment rates and municipal charges, those stay in. Unfortunately, you're going to need your premises, you're going to need to pay for your building, etc., so they stay in. Bad debts, so bad debts are a non-cash cost. So those are debtors. You have sold them goods or you supplied services in the past, and you've made the decision that they will not be paying you, they're not recoverable, and you've written them off in the prior year. So that's not a cash cost, and it's not something that you need to necessarily budget for from a cash flow perspective. So that one you can leave out. Yes, it's the loss of cash in the sense that you're not going to get that money from your debtor, but it's not something that you're going to physically have to now pay out of your bank account. Bank charges, unfortunately, we're going to have to keep the bank going. Cleaning, those are, I put them as non-discretionary, especially in light of what we're going through at the moment. You can't get rid of your cleaning staff, so cleaning is important. Commission paid, we've said it's a cash cost. It's not really discretionary if you've got salesmen or whatever your structure is. Computer expenses, I've left them as non-discretionary. In the old days, computers were perhaps luxury. Nowadays, they're a necessity, so I've left them in. Consulting fees. Consulting fees I've left in, again on the basis that those are not discretionary. Depreciation, so that's an interesting one, we leave that out. So depreciation is a non-cash cost. It's an allocation of the cost of assets over time for accounting purposes, but it's not more cash that you have to physically fork out right now. So those stay out. Discount allowed, I've said that it is discretionary. So I've left that out on the basis that you can always make the decision to not grant discounts at the moment. Donations, I've left that out. Donations, unfortunately, are discretionary in the sense that you don't have to make them necessarily. Electricity and water, I've left that in. That's a necessity and it's a cash cost. Same with insurance. Interest paid. I know that interest paid itself isn't necessarily a cash cost. It's the full capital payment which needs to be factored in. But for our purposes, I've just left interest paid in to represent the payments that we need to make on our capital goods, on our HPs or our installment sales. Legal expense, I've left that in just on the basis that it's not necessarily discretionary. No one really chooses to pay legal fees. And in the context of this business, they would have ongoing legal costs. Loss on sale of fixed asset, as I explained, that's the sale of an asset in the past. And going forward, you don't then need to budget for any costs like that because that's a non-cash cost. That's just an accounting allocation. Motor vehicle expenses, those are cash costs. Printing, cash costs. Protective clothing, all those remaining costs going down are all cash costs that are non-discretionary. So if you look at it in total in 2020, our expenses were 19,708,883. And if we take out the non-cash costs and we take out the discretionary costs, our total comes down to 17,124,380. So that is the amount of cash that we would need to spend in the current year, for the whole year, if we were to keep the same level of activity as the prior year. Okay, so that's essentially what that number is. We've then split that into fixed and variable costs to say, okay, right, how much of these are dependent on economic activity and how much of them are not? So if they are dependent on economic activity, then they're variable, and if they aren't, then they are fixed. Obviously, that distinction also changes very much depending on the nature of the business. So for example, in my situation, I've said electricity and water are fixed costs. But for a manufacturer who perhaps uses heavy machinery, a large portion of the electricity might actually be variable. It might be dependent on how long they need to run their machines, and so that would influence their electricity bill. In the case of a transport company, it's not really the situation. A lot of their costs are water and sort of warehousing costs, and those are fixed. It's really irrelevant how much economic activity they have. If we look at the fixed costs, accounting fees, those are fixed. Accountant is going to charge you a certain amount, sort of irrespective of your economic activity, unfortunately. Then we look at the rates. So those are assessment rates and municipal charges. Again, in the context of this business, they're fixed. They're not really going to change. Whether I transport 100 tons or 1,000 tons or no tons, I'm going to have the same building with the same sewerage requirements, etc., etc. Bank charges, they will pretty much stay the same. Again, being a transport business, bank charges aren't really dependent on economic activity. However, if you were a retail store, obviously, if there was a drop in your sales, your bank charges would come down because your cash deposit fees would come down, your credit card commissions would come down, etc. So again, it just depends on your type of business. In our case here, it's a fixed cost. Cleaning, I've said, is a variable cost. Again, it just depends on, obviously, what is going on in the business will determine how much cleaning we actually need to do. If the building is just mothballed with no one there, it's going to be a lot less than an active business that's trading. Commission paid, I've said as variable. So commission, as the name implies, is linked to turnover usually, and so that would be variable. Computer expense, I've said in this situation, is variable. It could just as well be fixed. It really depends on the nature of those computer expenses. In this case, I was looking at it from the perspective of license fees and communication costs and that sort of thing. And I've said that's variable depending on how much transport we actually have to do. In consulting fees, I've said in this situation is variable. Again, if there's no activity, there'd be nothing to consult on. So I've said it's a variable cost. Electricity and water, I've said is fixed, as I explained earlier. Insurance, to a large extent, is fixed. And interest paid is fixed. Legal expenses, I've said, is variable. It just depends on the amount of activity we do. Motor vehicle expenses in this situation is variable. Of course, the amount of transport we do is going to determine what our costs are. Printing, I've said, is fixed. Yeah, you could argue that if you have less transport, you have to print less strip sheets, etc., etc. But I think for most offices, printing and stationery is pretty much a fixed cost. Protective clothing, I've said, is variable. So that's the uniforms that the staff get. It's their work shoes and that sort of thing. And if they're not working as much, one would think that that stuff would last a little bit longer. So I've said that's variable. Rent is fixed, unfortunately. Repairs, again, that would be linked to how much activity we do. So that's variable. Salaries, salaries are fixed costs, unfortunately. Doesn't really matter how much your staff are physically doing. Their salaries are fixed. Of course, we're going to go into an analysis of the fixed costs on the next slide. So if you're sort of a little bit stressed out there, don't worry. We're going to cover that soon. But to a large extent, salaries aren't dependent on your economic output. Commission is, but salaries aren't. Salaries are just a fixed cost. Security is variable in the sense that this is a transport business, and so a lot of that security is linked to the actual transporting of the goods. So obviously, if we're going to do less transport, we would require less security. Your business might just be one premises and you sell goods from that premises, in which case it would be a fixed cost. So it just depends again on your particular situation. The staff welfare, I've said, is a variable cost. So again, depending on how much activity there is, you would then either spend more or you'd spend less on your staff. So that would be a variable cost. Telephone, I've said, is fixed. I think a lot of businesses, telephone costs don't really change with economic output. So I've left it as a fixed cost. Training is variable. Transport, I've said, is variable, again, depending on your activity. And then travel, I've said, is variable. Again, it just depends on how much activity you've got, whether or not you're going to incur the same amount of costs. And then workman's comp. So workman's compensation is based on your payroll, and if your payroll is largely fixed, then your workman's comp expense will be fixed. So what we've done is we've split those costs now. So the cash costs and the non-discretionary costs we've now split, and we said, okay, well, of the 17.5 million, 7.2 is fixed and 10.2 is variable. Okay. And it's important to understand that split for your business because, again, it's the fixed costs that you need to be concerned about. If the argument with variable costs is that they change based on your economic output, then the logical conclusion from that is that, well, if I've got no output, then I've got no variable costs. So those are not the costs you have to worry about right now. The costs you have to worry about are your fixed costs. And I know this is a fairly simplistic exercise in the way that I'm doing it, but really it's about explaining the principle to you. And obviously your own business is always going to be unique. And so it does pay to actually, sit with someone who understands your business as well as you do, who can then help you with this sort of analysis. Okay, but for our purposes, our fixed costs are 7.2 and our variable are 10.2. And as I've said, the variable costs, because they're linked to our output, we don't have to worry about the variable costs. It's the fixed costs that we now need to go down into. Okay, so moving on then into an analysis of those fixed costs. Okay, so I've taken those fixed costs of 7.2 million, and then I've said, right, now we need to have a response to each of those to understand what it is that we can actually do to try and mitigate our exposure to those costs. So accounting fees, 13,900. I've said your response there could be discussed with your accountant ways to reduce costs. You could do more work before handing over, and you could negotiate settlement terms. So a lot of accountants at this time are obviously fully aware of your business situation and are open to negotiations and open to perhaps discounts or at least a price freeze year on year. What you can also do is, the reality is that if you aren't able to work and you are in lockdown, you yourself might have a little bit more time to get your paperwork more in order before handing it over to your accountant, and in that way you can actually save costs. So a lot of businessmen are simply too busy to be fussed about paperwork, and so they leave it to their accountants. But unfortunately, you do pay a premium if you hand over a pile of paper that hasn't been analyzed or organized or sorted out. If you can do some of that work yourself, then your accountant is normally willing to discuss with you a reduction in fees. So I've said there that if you can do a little bit more work, and if you talk nicely to your accountant, perhaps you can save a little bit there. And I've said you can save just short of 2,000 Rand perhaps. Okay. But again, that just depends on your situation and your relationship with your accountant. The assessment rates and municipal charges, I could be wrong, but I haven't seen any relief that has been offered by the municipality. In fact, I've seen a lot of bills a little bit higher than normal, and quite a lot of fighting going on with billing, etc. So I've just said there's no relief. You unfortunately just going to have to figure out a way to cover your municipal utility bill at the moment. Bank charges. I said they discuss with the bank manager your annual review fees, your credit card fees, your bank transfer fees. Sorry, is there? Now is the time to shop around. So, a lot of banks will carry on same old year on year, and off they go. And you don't necessarily always have the time to go and interrogate what you're being charged for and how much your actual fees are. You might be surprised. Credit card commission fees, for example, on your point of sale devices, not particularly relevant in this business, but for retailers, massively important. And you can shop around, just because you're with one bank, it doesn't mean you can't have a credit card machine from a different bank. And not all banks charge the same for cash deposits. Not all banks charge the same for transfers. And so there really is scope to shop around and reduce your bank fees. You might have one bank for one set of transactions, and you might have a different bank for another set of transactions. It really does pay to just do a bit of shopping. And in theory, now you should have a little bit more time to actually do those investigations. So I've said there that there's roughly a 10% saving that you could make if you interrogated your bank fees and you shopped around a little bit. Electricity and water. So I've said that it's a fixed cost, but there are ways to save electricity, and there are ways to save a little bit of water. In this case, being a transport business, obviously they go through a fair amount of water, just maintaining their fleet, etc. And so I've said, well, there's probably 10% there that they could unlock if they installed water tanks with rain collection systems and perhaps installed some solar pumps and that sort of thing. And I think most businesses, if they're really honest with themselves, if they really looked at it and they really tried, you could probably save 10% quite easily just by doing a couple of easy fixes there. Insurance. So most insurers have provided some relief. You just chat to your broker. So, you know, in this case, the vehicles, I've argued in this particular example that they've not been able to operate at full capacity. Obviously, the transport business was only able to transport essential items, and so there has been a reduction in the activity. So a lot of their vehicles have been standing idle, and if you chat to your broker, the brokers have been able to get relief for a couple of months, or at least a payment holiday as well. And then there are also ways to just actually reduce your premium. So putting in tracker systems and that sort of thing. So I've factored in a little bit of a decrease there from 720 to 580. Again, it's, you know, it's fleet dependent, it's insurer dependent, but you know, even in our professional services firm, you know, we've managed to get a 10% reduction just over the next few months. Doesn't sound like much, but all those savings do add up. So if you haven't spoken to your insurers, it's certainly time to do so now. Interest paid. So again, it's not that the charge is coming down, but a lot of the banks have given payment holidays. And the interest rates have come down significantly since the start of the year. As you were aware, probably this week, I think it was another 0.5 percentage point, or I think it was late last week. So interest rates have certainly come down, which has resulted in interest coming down substantially. So that is quite a big saving. Printing and stationery, we've found it ourselves. We were very paper heavy, and again, just being forced to work from home. There are ways to actually reduce your printing and stationery cost, to work online, you know, digital signing, etc., etc. So I've said that, yeah, there could be a little bit of saving there. Rent pay. So landlords have been reluctant to give a blanket sort of exemption. But you know, a lot of our clients have got property, and in talking to them, you know, they've said to me, Rino, we don't mind. I mean, we understand that these businesses are bleeding, and we don't expect them to pay their full rent. But you know, if at least they can cover the utilities, the rates, you know, and any sort of interest that our landlord might have on my bond, then I'm more than willing to negotiate with them. So I've made a little reduction there in rent paid, but you'll find that a lot of landlords are in fact very open to discussions there. Salaries. Okay, so salary, this is a little bit of a difficult one. So I've said UIF TERS for everyone, and essentially you don't then have salary costs. Now I know that a lot of businesses haven't taken that approach. I know that a lot of businesses have said, okay, well, how much can I get from UIF, and then I'll top my staff up so that they're not battling too much during the next couple of months. Remember, that's voluntary, so you don't have to do that. Obviously, you want to do that, and yes, you obviously want to maintain your relationship with your staff. And I certainly do applaud all the employers who have, you know, have made an attempt to pay their staff their full wages. So yes, you could, in theory, claim the full salaries from UIF TERS, and that's what I've done there. But that might not be your situation practically. Again, this exercise discussion is really for illustration purposes as opposed to hard and fast rules. So salaries I put down nil, because there are options to fund your staff, but again, your situation, it might be that you want to pay your staff 30% of their normal wages and top them up with UIF or whatever the case might be. Telephone and fax. We found that there really can be significant savings on going with bulk contracts, using two-way radios, using VoIP instead of normal telephone systems, using WhatsApp. A lot of people have been using WhatsApp calling lately as well. So there are quite a lot of savings that can be made there. And again, now's the time to be shopping around. I've seen a lot of the cell phone providers, etc., providing some really good deals at the moment. And so now is the time to possibly make a saving there. And then workman's comp, I said, is linked to your payroll. And so it will come down. And I've just put in that reduction because you might not be paying your staff for, say, 3 months or whatever the case might be. And so from that perspective, there would be a reduction. But that's just linked to the fact that this is an annual amount as opposed to a monthly amount at this stage. But in that analysis, the fixed costs have come down from 7.2 to 1.9 million. If we divide that by 12, we get 160,000. And then I've multiplied it by 3 months to say, well, you know, if we're just budgeting at this stage for April, May, and June, I know that a lot of businesses will operate from of June potentially, but remember, it's going to take time for everyone to get back into the swing of things. So I think you need to cater just for June as well, for reduced demand and for the time it's going to take to get back to normal. So in this situation, for the 3 months, they're going to need about 480,000 Rand. Okay. So that is 480,000 Rand that they are going to need to put into the business from somewhere. And that, I think, is the important thing to understand. You know, if they're not going to have sales, for my purposes, I've just said that they're not going to make any sort of margin. They're going to need to find 480,000 Rand to put in. And remember, that is also the loss essentially for 3 months, because they're not going to have any sales or income. And so the loss for 3 months is going to be 480,000 Rand. So it is important to be able to quantify that amount. And I think that really is the thrust of all of this. You know, a lot of business people I've spoken to is, oh, what money can I get and what funds are available, and oh, there's loans here and whatever. Yes, there are lots of options potentially that you explore, but how much do you actually need? You know, I've seen people applying for some of these grants, which are, say, 20,000 Rand or 25,000 Rand, and it's taken them weeks and all kinds of hassles to try and get paperwork in order, etc., etc. Why? You know, it just doesn't make sense. The return on the amount of effort that you're putting in, you know, just doesn't make sense. You know, rather, if you're a business in good standing, you know, spend that time talking to your bank, trying to temporarily increase your overdraft facilities, or trying to maybe get medium-term loans, or whatever the case might be. You know, that is a better use of your time than just chasing after every single announcement that's out there for small business relief. So I think the other important thing is to look at it and say, well, you know, without the analysis, you're saying, well, you know, my business, I'm spending 19,700,000 Rand a year. It's almost R1 million a month. And so I need to come up with, you know, 3 million Rand for these 3 months. Where am I going to find 3 million Rand? But the reality is you don't. You actually only have to come up with 500,000 Rand for 3 months. And that becomes a lot more manageable. And, you know, my philosophy is always, if you at least know what the problem is and you can quantify the problem, then you can deal with the problem. Until you've quantified the problem, really you're just shooting in the dark and you're panicking and running around like a headless chicken. So that would be my advice, is to do this sort of an exercise to get to a target so that you know what it is that you're trying to achieve. Okay. Some of the new costs that you do factor in if you're planning on opening and you perhaps haven't opened yet. Obviously, sanitizers ongoing. You're going to have to buy a fair amount of sanitizer, personal protective equipment, face shields and gloves and the like, temperature screening equipment. There are some very fancy options out there, or it could just be a handheld scanner, whatever it might be. Additional cleaning materials, waste disposal you're going to have to think about. You're going to have to do training with the staff in terms of your risk mitigation plan. You might want to bring in an external service provider if you feel you don't have the skills to do that. And then your workplace preparation. So obviously a lot of businesses have been putting up screens and barriers at reception and that sort of thing. And then deep cleaning. It's become a pretty good practice for anyone back to just do a thorough deep clean of the premises and of the vehicles in the case of this transport business, all of the bills, the deep clean, etc. So those are some additional costs that you're going to have to budget for. So to try and only go and raise the 480,000 that we spoke about here wouldn't make sense. You need to then factor in these new costs, which would probably be somewhere in the sort of 30, because of the size of this business, probably going to be in the 30 to 40,000 Rand range. So it is worth just remembering that you do have to budget for those costs too. Okay. So how do you then do this? So the first step is line 1, any work must contribute to fixed cost recovery. And so if you are now looking at doing work or undertaking some sort of activity, you need to factor that into the equation. So I've seen a lot of businesses diversify, start selling different goods. Everyone has now become sanitizer salesman, etc., which is fine. You know, businesses must survive, but just bear in mind how much it costs to run your system versus how much you can sell. So, for example, it might not make sense to get your whole situation up and running, get all your sanitizers in place, your costs, everything, but your own sales are going to be 1,000 Rand a day for cleaning materials, for example. That doesn't make sense. You know, it might make you feel good to be getting some money to the till, but in the greater scheme of things, it might actually be costing you. So you need to be sure that whatever you're doing is actually going to contribute to your fixed cost recovery. Cash fixed costs must be negotiated and put in place. So in our situation here, we said that we needed 480,000 Rand for the next 3 months, and we can't rely on sales. So we need to inject 480,000 Rand from somewhere. So some businesses might have 480,000 Rand in the bank. That's great. Some businesses have spoken to their banks and taken additional overdraft facilities just for 3 months. That's fine. Finance it through an overdraft if you can. Other businesses might have taken 5-year medium-term loans. Those are available at the moment at Prime. That might be an option. Or it might just come out of your own personal wealth. You know, you might have a bit of a nest egg, and you decide that you want to put it into your business just to keep it going over the next few months. That also is fine. Unfortunately, it does also mean that you might have to make that hard decision. You know, if the business was marginal before this, perhaps this is the final nail in the coffin, and it might be time to just close it down. You know, those are all decisions that you're going to have to make in consultation with your accountant or someone similar. Then collect old debt. So really now is the time to go and jump into that debtors book, go and have a look at people who owe you money for a long time, and give them an option to settle. You know, I had a couple of fairly old debts, and I wrote to those people and I said, well, look, you know, your debt has now been outstanding for a long time. A portion of your debt relates to interest charges. I'm willing to waive those interest charges and perhaps give you a bit of a discount on the capital if you can just settle in the next couple of days. And a lot of people were grateful for that, and they actually took us up on that offer. So again, you know, now is the time to realize that it's not just you that's struggling. Other people out there are also struggling. And so if you can appeal to them and say, well, listen, we're in this together. If you can just pay me something, I'm willing to meet you halfway. A lot of people are coming to the party, and you're collecting cash now, which helps. It certainly does help. Sell scrap. So, you know, in a transport business, there does tend to be a fair amount of scrap around. Now is the time to go to the scrap yards and wherever, if they are operating, and offload that stuff. You know, generate a bit of cash out of it. If you've got old equipment that's been standing idle for a long time, now is the time to possibly look at getting rid of it. You know, it might help you from an insurance perspective, but it will also just help you get in a bit of cash flow. So I think at the moment, cash is king, and so if you can just get your cash flow up, things start looking a lot better. Invoice efficiently. So this is quite a quite particular, I think, to a lot of the artisan type of professions. You know, I'm thinking plumbers and electricians, etc. They tend to run around helping everyone, getting the work done, getting stuck in there, but they don't send out the invoices very efficiently. And so, you know, it might be a month or two until the invoice eventually arrives. And, you know, now is the time to make sure that if the work is done and the client's happy, you need to send the invoice immediately. It's not that you're greedy for collections. It just gives your customer a chance to raise the necessary funds. But from your perspective, it also just means that the clock in terms of collection starts running a little bit quicker. So I really think now is the time to just look at your admin system in terms of invoicing. Focus on what needs to be done to get money into your account. So, you know, I think I've heard the comment quite a lot where people have said, you know, this lockdown has given me time to just sit and reflect. It's given me time to get more in touch with the fundamentals of my business, and I'm more focused than I have ever been. And really, that you focus on what you need to do to get money into your account. So there might be projects on the side that you want to do, but if they're going to bring any sort of cash flow in the short term, perhaps now's the time to put those on hold. Really just focus on your core business and making sure that you are getting fees in, because that really is what's important at this stage. Move to retain a business where feasible. So for some clients, you know, we do work, and it's a large amount of work, but it's all concentrated into, say, a month. And so when you send them the bill, it's, you know, it's quite a cash flow burden in a month to have to settle. And so what we've done is we've moved to a monthly fee. So what we said is, well, you know, we've got ongoing business with you. We know that our annual costs are, say, 12,000 Rand, but what we are willing to do is perhaps a little bit of a discount. So we'll charge you 11,000 for the year, but on the basis that you pay us monthly. And so it's beneficial to the business owner because it's a more gradual cash flow. It's also better for you because then at least you're assured of a continuous income and you don't have to pay for that person once a year to get your cash flow in. So that's something to consider. Debit order collection options are linked into that retainer business type of idea. And then use technology to automate processes like invoicing and collection. So there are a lot of cloud-based options out there in terms of accounting. And a lot of them actually have payment links on the invoice. So you literally can use your cell phone, generate the invoice on site, send it to your client, and he can then click on a link and pay you via credit card, and it's done as quickly as that. Those options are becoming more affordable. And really, if you factor in the efficiency and you factor in the fact that you are getting paid that much quicker potentially, really it pays for itself to start investing in more sophisticated accounting software. So those really are my suggestions moving forward. Just in terms of cash flow planning, I think it's my second last slide. You need to establish what you currently have. So in our situation here, we knew we needed 500,000 Rand to carry us for the next months. Go and actually look what are your overdraft facilities, how much money have you got available, perhaps in an access bond or wherever it is. And once you've established that, you can then go and say, okay, right, now I need to go to the bank because I need to get X amount. Or I need to apply for this grant, or I need to apply for that loan, or whatever the case might be. You know, a lot of business owners, unfortunately, they come to us and say, oh, now we're in trouble. But when you ask them how much they need, they don't actually have any idea how much they need. And so that sort of tells me that it's a bit more of a panic response than an actual budget response. Understand that the loss needs to be made up first before repaying loans. So, you know, in this situation, if we had borrowed the 500,000 Rand, remember that we are going to need to actually make 500,000 Rand in additional profit to first just pay back that loan, and then we can go back to our normal loan repayment. So borrowing on top of existing borrowings is always tricky, and trying to then factor in the cash flow requirement to service your existing debt plus your new debt can be a little bit difficult, but just bear that in mind. You know, a loan is not a grant, and so whatever you borrow from the bank, you're going to have to pay back. And so you have to factor that into the equation as well. You know, just because banks might be a little bit more lenient at the moment in terms of their affordability criteria, doesn't mean you must be sort of naive and take loans that you can't afford to repay. I think it is going to be important that you are actually sure that you can repay that money. There's no sense in just trying to keep a business afloat by any sort of means necessary, but then land yourself into a bigger problem later on. You know, these positive or these favorable loans that the banks are giving now, the so-called COVID loans, which are at prime over 5 years, you're still signing personal surety for those loans. So, you know, if anything goes wrong, it's not just your business you're going to lose, your house you're going to lose as well. So don't sort of think that that the banks aren't going to protect themselves in terms of recovering any money that they borrow to you. And then, yeah, this is always the voice of an accountant, always be pessimistic in planning. So never do your projections on the basis that things are going to be great and they're going to be back to normal within record time, and that your sales are going to be, you know, that much more in that first month back because of the pent-up demand, etc. Rather just be cautious and be pessimistic. It's always better to plan for the worst and then be happy when in fact it doesn't come to just a bit of contact information. So we've got 4 offices in the Eastern Cape, but one is in Port Alfred, one is in Queenstown. But for our purposes here, we've got our office in East London at the hub, and then we've also got an office in King Williamstown in Lower Mount Road. So you're welcome to contact us on the numbers. Obviously, at the moment, we're not taking on any sort of walk-in type of so please do make an appointment if you want to see us. Yeah, so that really is what I wanted to chat about today. I sincerely hope you did find it informative at least. And yeah, Sam, over to you if there's questions or anything like that.
Okay, hi there. Yes, no, thank you very much. It was very insightful with regards to retooling elements and how to focus to make sure that you have everything managed well, in the fact that what's nice to have and what is a must have. So that's what I took away from what you presented today, Rino. Questions, I haven't got any questions listed in the chat box. I'd like to ask the panel if you'd like to unmute yourself, and then if you would like to express a question through to Rino, you may gladly do so now. There hasn't been anything listed as yet, so I open the floor to everybody online. Okay, I'm not sure if anybody is able to set up a question. Maybe there are no questions. Okay, all right, so there is a question here from Sia. Just in the event where clients do not pay on time, affecting our business and, you know, the meeting obligations. He was like, your advice on that. So I can read it to you. He said, in the event where clients do not pay in time, affecting our business meeting obligations as they fall due, and he's asked for some advice. So are you going to take that offline, Rino?
Yeah, look, I'm happy to do it offline, but you know, that really is, it's a negotiation. You know, that really is what it is. It's a negotiation between you and your client, and it depends on your relationship with them. Unfortunately, a lot of the debt collection processes have been halted. So yes, you could hand them over to attorneys, but the best that the attorneys could do up to a point is really just following up for you. A lot of the actual serving of documents and issuing of warrants, etc., have been put on hold at the moment because everyone's in the same situation. So There's not a easy answer. I think if there wasn't an easy answer, everyone would be doing it. I think just a phone call and a discussion of your situation with them normally goes a very long way.
All right, I see there's lots of great comments on board here with regards to your presentation. So we do appreciate your time, Rino, on this. And yes, going forward into our next financial sets, may everyone have great financial background and input. And yeah, take it from there. Any questions, you can gladly email us on my email address, everyone, members@bkcob.co.za, and then as well through to Charteris and Barnes team where we can assist you. All right. Thank you very much. Enjoy the rest of your day. We look forward to seeing you soon.
Pleasure. Thank you.
Thank you. Bye, everyone.